Okay, good day, everybody. This is Jim Kinney for the Option Professor Market Weekly Update. Of course, this is for April the 5th, and 2019 is the year. As always, I remind you that past performance is not necessarily indicative of future results. And also, I remind you that short-term trading, option trading does involve substantial risk of loss. So again, not right for everybody. Consult with your clearing firm, yourself, your broker, and anyone else who gives you advice or is working with you to determine what, if any, strategies and ideas might be appropriate for you. Okay. Again, I'm giving you a quick update here on where we are as we speak. Is Currently, the screen showing me we're up 21 on the Dow, and we're up 36 on the NASDAQ. Big report today. A lot to cover today, so let's get right into it. The unemployment report came out today, showed a big bump in jobs, and it also showed moderate wage inflation. And so basically, it was a good report as far as the market's concerned. And of course, it was a good report for the Fed as far as their on hold status, because the inflationary bang on wages was just not there. So they call it a Goldilocks report, I guess. And I don't know what that means, but I guess it means good. So basically, that's what the unemployment thing happened. I think the big thing coming up that we've got to keep an eye on is earnings. And that starts next Friday with JP Morgan and Wells Fargo, to name it two. And then, of course, it'll go from there. Now, earnings, again, is going to be a very big catalyst on what's going on. But I will tell you right now, quickly going around the horn here, we've got some very good things happening in the market. Again, on this broadcast, just to give you a refresh, we went down to 2350 in December. The idea was that we were going to go back towards the 200-day moving average, and every pullback might be a buying opportunity. That's exactly what we did. We went back to the 2750. Then once we got to that neighborhood, some of the Elliott Wave guys that I follow, they were looking for 2800 and then 2940, which is the all-time high to be tested. And so far, so good. Now, when we got that big pullback of 460 points, I did mention to you a couple of things were very important, because a lot of people were panicking that day. And I did mention that the 10,000 level on the transport, very important to hold, and it has. The 1500 area on the Russell, very important to hold, and it has. And then, of course, 2800 area on the S&P was important to hold, and it did. So we've rallied off of that level after that big drop of 460 points, which is pretty much in line with what I thought might happen. Now, again, right now, it does look like the market is going to try to make a run at the 2940 level. And let me give you some things to chew on so you get an idea of what's going on. We go to the S&P 500 right now, and currently I'm showing that it's at 2889. 2889 again is within an earshot of 2940, so that's why I'm thinking it may try to make a run there. There's a little bit of resistance here at 2900, so we went up to 2892. You see these lows here at 2900. I don't know if that's going to, and that high right there is 2900, so it may have a little bit of short-term problem there. I'd be careful right around that level, but it does look like it's trying to get to that all-time high. There's no doubt. There's a gap right there you can see where my pointer is, and that, if this 2900 is going to be a problem, that could be an area where it comes back and fills in that gap. That looks like around 2840, 2850 ballpark area. Okay, now here's another good thing for you bulls is the 200-day and the 50-day average on the S&P. And let me show you that real quick. And there you go. The 200-day, 50-day average is 2773, and the 200-day average is 2758. So they're both crossed now, so that's a good thing. And they both look like they're rising, so that's a good thing. So this is not a bad thing right now as far as the market is concerned. Again, I'll get into the earnings things, and I'll give you an idea what some of the discounting mechanism might be going on right now. Now, the other things that were problematic that seem to be getting better, transports. Again, that was one of the things that made me a little concerned about the rally. But they're back on the bicycle. Now, let's take a look at the transports right now. And they are obviously making a move to the upside. Today up 41, was higher. Again, if we can't get through the 10.8 area here, this 11,000 area here, and if the S&P can't get through 2940, this could be an area where the market could pull back. So you got to be a little bit careful up here, because I'll show you the VIX is quite low right now. So again, what would the caution be? 11,000 can't get taken out by the transports, and 2940, 2900 cannot get taken out by the S&P. That could be setting you up for a short-term pullback. Be careful of that. But clearly, the moving averages have crossed on the S&P. But of course, now with they're down at 2775 and 2750 ballpark, you're now getting to be 100 points above it. So there's room for a little bit of a dip here if it wants to back off those numbers I just mentioned. All right, now let's talk about the Russell, because the Russell has been a little bit concerning. There are people who think that the rally looking forward is going to be contained to just stocks that have good sales growth and good earnings growth. So we could see a lot of the companies that have gone up because they're in the major ETFs, and maybe they're not doing that great, but they're getting lifted because why? When people buy into the ETF, they got to buy those stocks. Maybe some of those may not participate as much in the upside in the coming months as people focus on. So when the earnings come out, see how their sales growth is and see how their earnings look as far as growth. And those could be the ones to attach your wagon to looking forward. That's just an opinion, of course. And everything today is my opinion and my view. So obviously I could be right or wrong. But that's what I'm hearing. That's how I'm feeling. Again, on this market here, you've got the Russell, and the Russell has not been able to take out 1600. So again, 1600 on the Russell, 2900, 2940 on the S&P, and 11,000 on the transports. All could be an area where on a short-term basis, if there was some news that was not that great, the market could have a bit of a pullback because again, it's had a very long run. It's had a very big run in a long time. Also, the moving averages are not as friendly on the transports and the Russell. Let's take a look at that. You got the 250-day at 1540 ballpark and 1575 ballpark on the 200-day. So they're still inverted to the downside. The market is trading above both of them. But again, it would have to hold. And you can see from this graph here, if you get above 1600, then of course we may very well blow out the highs of what I just mentioned as resistance. So again, that 1600 area looks very big. Again, though, this is 2,000 stocks. And if people are going to start focusing only on the ones with good sales growth and good earnings, then you could be looking at a situation where some of these Russells may not participate in the move as much if they don't have good numbers on sales and earnings. Okay, and let me show you the moving averages on the transports because I think they're still inverted as well. And one of my theses was that the market, might be having some back and forth action because the technical picture, when you have the 50-day under the 200-day, sometimes suggests that the market will wait and consolidate and let these averages turn before they go on their next major run. Again, we are at 10,320 and 10,500. So they're still inverted, but there's no question the transports are trading well above them. And you can see why I was saying 10,000 was a big level for the transports, because that was pretty much the low over here and all those lows there. Can you see that 10,000? Excuse me. The 10,000 was very big in 2018, and then it had that big break, which obviously was a big Fed scare among other things, and now it's back above the 10,000. So that 10,000 level, if you want to be bullish, you certainly want the transports above that level, and that's your rails and your trucking and all the rest of them, and I think the airlines are in there as well. Okay, so that gives you a little bit of a rundown of what I've been seeing here as far as that's concerned. Let me do something now, and let me talk about a couple of companies here. JP Morgan, which is going to announce next week, Friday next week. And then the ECB, European Central Bank, they've got an announcement on Wednesday. So the big things next week for me are Wednesday, what does the ECB do? And then, of course, what the earnings come out in the banks. You can see here, that the lower highs are still there, right? Okay, so if you can get above this 110 area, then obviously you can set yourself up for a pretty decent run up. Let's look what the moving averages look like here on this is JP Morgan. And obviously this is the best of breed according to many people as far as banks are concerned. Okay, and so you've got 101, 107. So, still inverted, and we're not above 107. So again, if their earnings come out or their trading activities come out and don't really make people feel comfortable, again, there could be some dips a little bit ahead of us because, again, we've come a long way, and there is some resistance on some of the indexes right above us. With regards to the other one, which is Wells Fargo, They just got their CEO decided to step aside. That got a 1 day bounce into the 50s, and then that was about it. 1 day bounce into the 50s. Yeah, you see when the guy retired or quit or whatever he did, it popped up to 52. That's pretty short lived. Right back under 50 again. Okay, and the volume seems to be pretty high here. So, this particular stock, I'd like to see it above 52, and if it got above 52, then the stage could be for much higher levels. People are saying that the interest rate environment now, because the Fed has gone on pause, is more positive for the banks, and only time will tell if that's just more malarkey. Because again, people have been touting the banks for a year and a half, and there's not been a whole lot of money coming out of it. So you got to be careful. Everyone's saying financials, financials. Again, there's some resistance there. If it got above there, I'd be more interested in it. Okay. Well, anyway, since I did mention earnings, let me go over some of the ideas that I have on earnings. JP Morgan, Wells Fargo next week, S&P. Some of the people are forecasting, right? People are forecasting what earnings might be doing. And so basically, let me do this real quick and get you um, the XLF. That's your financials. Okay. So let's get an idea of what some people are thinking about earnings. Year over year, they're expecting them to be minus 3.9%. First quarter earnings, again, are supposed to be slow like in 2016. So it's supposed to be pretty slow earnings in this first quarter. A year ago, year over year earnings were up 25%. So you get the idea. The comps are tough right now because last year they did the tax cut. Everyone's earnings went through the roof. And obviously that's a tough match for these people, these companies first quarter. So that could be a little bit of a problem first quarter. Now, stocks, again, a lot of people think that the action looking forward is going to be narrowing, meaning not all boats will be lifted by the tide, if there is a tide, and that earnings growth and sales growth will be the two things you want to focus on. So as you're hearing about earnings, look into what are the sales growth, what's the top line looking like, and then of course what do the net earnings look like. And if there's growth there, then they would be a candidate to keep an eye on more than others, according to some people. Basically, chasing fewer stocks going forward would be the idea. Again, the fundamentally weaker stocks that have been lifted because they're in the major indexes or in these ETFs, and people buy them because obviously they're buying the ETF. Again, they may not keep pace as much as other, which may mean that the indexes may not keep pace with the stock pickers, and that's something to consider as well. Again, we're looking at a lot of expectations that Q2 will be a more improved, more like flat year over year. Then Q3 and Q4 is when the rubber hits the road. And that's maybe why this market is going up, because we are in a 6-month discounting mechanism in stocks many times. And so maybe they're saying that we'll buy now in March, April, May. And then basically, we'll get good numbers coming out. Q3 expectations are improvement of 4.3%. In Q4, some people are calling for an 8.3% improvement. So again, as the year goes on, the comparisons are supposed to get easier, and that, of course, would be a positive for stocks. Again, based on how high they are when the numbers come out. It could be a buy the rumor, sell the fact type thing. If everyone's plowing in early, by the time you get the good numbers in Q3, Q4, maybe they'll sell into that if the prices are quite high. Valuations do matter, and the valuations are getting stretched again because of this big run up and a non-correlating earnings report. So we have to be a little careful always. But again, you can't fight the tape and you can't fight the Fed. The Fed's on pause, and basically the tape is rising. And that's the overall situation right now. Again, some of the moving averages are still a little bit dodgy, but that's the story there. Now, China has been making a big turn, and a stock that I've been talking to you about on these broadcasts to keep an eye on has been Alibaba. And Alibaba bottomed at 130, and that's where we were starting to zero in on it at the beginning of the year, basically in that 130 to 140 range, and it's been going and going and going. Right now, you can see 170 is kind of important for support. You don't want that getting taken out on the downside. And if you can take out 190, again, that would be a good thing as well. Again, we are talking a China trade deal. Looks like it might be imminent in the next 4 to 6 weeks, according to what I've heard out of the president's mouth, but only time will tell if that's going to happen or not. Let's see what the moving averages are doing over there on on Alibaba? Have they turned yet? Because they were sloppy. Yeah, they turned. Okay, so you're at 164 on the 200-day and 172 on the 50-day. So again, there's a little bit of price evidence on the moving averages that there has been a turn. I'm not too excited about the 50-day moving average on volume being way lower than the 200-day. That's suggesting that the commitment of volume is certainly not there during this rally, and that's a little nerve-wracking. If it did pull back sharply, again, the 164 to 150 area might be the worst case scenario if this thing is going to still be in an uptrending market. Turning towards another one. Uh, let's just go 10 cent here. See if we can get that symbol up here quick and see what 10 cent looks like. Okay, and that's TCEHY. And 10 cent obviously is another one that people like in this region as one of the main leader companies. And that one looks like it's trying to matriculate higher as well. It's trading at 48. Let's look at their moving averages and see if something's going on. Look at that market cap, 456 billion. We're talking huge, right? All right. So anyway, what does it look like there? 44 over 42. So that's not a bad cross. But again, the volume stinks. 3.4 versus 5. That's pretty light volume for an advance. So that's why you got to be a little bit careful here. But if it can hold this 45 number, 42 number, that's a good sign. So let's see how the weeks go here. Getting above 45, I think, was a big thing. Let's see if it can hold above here for some length of time. Okay. What are we saying here? China and Asia, emerging markets, might not be a bad thing to look at right now. Let's take one last look at EEM, and that's your emerging market, and see what's happening there. It's up around 44. And let me give you the graph here so you can see. Up. Hold on. There you go. And you can see it's trying to break out on the upside above 44. I think the moving averages are doing pretty good. Again, I don't like the volume being way down here during the advance. That's the only thing that would get me a little bit nervous. But other than that, the trend does look like it's trying to turn up. Oil stocks, I brought to your attention Chevron, Exxon. So let's look at Chevron, which is one of the leaders in this industry for sure. And as I've been talking to in the last month or so, 2 months, it has turned. So it went down to 90, got above 95, got above 100, got above 105. Now it's above 110. So it's been matriculating quite well here. And look at that dividend yield. Nothing wrong with that. PE ratio is not terribly high. So this is one of the leaders in the area. Let's look at the moving averages so we get an idea of are we in an uptrend versus the moving averages. And there you go, 100 over 99. Now you're 12% above the moving averages, which is not excessively overbought, but again, getting above 110 here is a big deal, as you can see. 52-week high was made on Tuesday. So again, actually, it looks like it's going to be made today. Oh, it's being tested today. Again, pretty straight up move. But again, if oil's going to 70, like Brent has been going, then of course this thing would probably be able to participate in that advance. Okay, turning towards another sector, which would be the tech sector. Let's take a look here at the Vanguard. Oh, hold on a second here. The Vanguard ETF. There's many ETFs out there, so I could pick any one of them. I'm just picking this one because I'm familiar with the symbol, and it's easy for me to just put that symbol up there. So hold on one second. Let's get that up. And we'll do a round robin here a little bit on tech. Again, people are looking for alpha. People are looking for growth. And where do they look for that kind of stuff? They look for it in tech. So bottom line is, so let's take a look here. Oop, there you go. Okay, yeah, we went as low as you can see, big dump in it during the drop, and look at that climb, steady, 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 steady. And these all have the bigger companies in it, the Microsofts, the Apples, the Facebooks, all the kind of stuff like information technology. So, Amazon, I believe, is in there as well. Again, you've got a lot of companies in there that are big names, and big name tech has obviously been doing pretty darn good, and it continues to be pretty firm right now. Looking at the moving averages, are we getting way overdone here? Let's find out. And yeah, 188, 186, there's your two moving averages. They've crossed to the upside. That's a good sign. And we're at 205. So again, could it pull back a little bit? All of it could pull back if we're not going to get above 2940, 2900. And could we dip if we don't get above 11,000 on the transports or 1600 on the Russell? Yes, we could. Now let's give you an idea on why I think that's possible, and we'll take a look at the VIX. And the VIX is at 1299. It hit 1217 today. That's a very low reading on the VIX. Okay. So obviously, as I've been telling you for time and time again, my view on the VIX, if it's above 25, you could go into the abyss like you did back there in December. Okay. If it's between 17 and 25, you're probably in a fairly steady market. And if you're underneath the 15 area, then you're generally in a bullish situation. But when you get low, like 12 or 10 or that area, then you could have a correction. Now you can see when you got down to 10, I'm sure that accompanied a drop in the stock market. When you got down here at 11, drop in the stock market. When you got back down here even to 14 or so, 13, you had a drop in the stock market. So are we going to get a drop in the stock market? Well, you're in the zone where it could happen on the VIX, and you do have some resistance that I mentioned on those indices. So that's why you got to be a little bit careful here, because Tom, Dick, and Harry are all very comfortable and very bullish. And sometimes when Tom, Dick, and Harry is in there and everyone is thinking kumbaya, sometimes something occurs, like how about earnings misses? And then, of course, maybe sometimes you get a dip off of news like that, because the market obviously has much long participation. And if something occurs where they want to come out, obviously there could be big volume trying to come out. And if the buying is dried up, the guy who performs the other side of the market, he'll drop the bid. And he'll drop it sharp like he did in December when everyone was selling and there wasn't much buying. Now, I didn't say that's going to happen, that type of a drop, but it shows you that it is a marketing operation with buyers and sellers. And if it's overwhelming volume on one side or the other, you do get a pretty rapid move on the other side. So one stock that I've been keeping an eye on is Chipotle. And Chipotle is up at 707. And you'll see in a second here why I'd be a little bit concerned about it. You got a big gap there between 535 and 560, let's say, right? Big gap there. And then the thing that I find most concerning, obviously the volume we'll check on in a minute, but the moving average. Okay, the moving average here on the 200-day. I'm going to get that for you right here. Oh, you went too far. Let's go. Okay, 200-day is a 501, right? And we hit 715 on Monday. So you take 715 minus 501, and you get a number of 214. If you divide that into 501, you find that it's 42% above its 200-day average. Now, the volume has not been bad, but look, it does seem like it's drying up a little bit here. Again, you can't step in front of a freight train. So here's my thinking. If 715 is not taken out by next week, and we start taking out 690 on the downside, I think the setup could be, if their earnings are coming out, which they are on April 24th, that is there a possibility that the earnings disappoint and this company that has gone up so fast so far and is so far extended from the 200-day could have some kind of retracement? And I think obviously it's possible. But again, this is a freight train, and you need to have it stop making new highs, obviously, and maybe show some deterioration, and then be fortunate enough that the report that comes out on April 24th may not be as positive as people have been. Now, short interest is quite high on the stock. So again, there's some built-in buying when there's short interest sometimes because people cover their shorts. And I wouldn't be surprised if some of this activity we've seen are people covering their shorts. But we'll have to see. But I think, when I see 50% above the 200-day average, and I see a company that obviously has had a very big move, that has a report coming out. If that report is disappointing with a PE ratio of 80 or better, I would think that there could be some vulnerability in this. Obviously, this has had a great run, so you are kind of bad mouthing Santa Claus here because this thing has been delivering the presents, right? But again, even Santa at some point takes a break, and that's all I'm saying about Chipotle. I'm keeping an eye on that one because I think the setup there could be something that could be interesting looking forward. Okay. let me see what else I can give you here. We did go over some of the sectors. Some of the healthcare stocks seem to have had taken a little bit of a timeout along with the drug stocks. Let's see how United Healthcare is going today. Trying to give you a taste of all the different situations here, and then I'm going to close up by a couple of things that I'm watching as well. Okay, United Healthcare again. Yeah, like I say, it used to be up at 290. Now it's in the 240s. So it did take a timeout. Healthcare basically has had a pullback. There's no question about that. I think some of the drug companies have also had a pretty good pullback. Biogen being one of them. Yeah, Biogen got a not rosy reading on one of their trials, and then basically it went from 340 down to 220 before you could spell Biogen. Live by the sword, die by the sword when you're in the biotech. Okay, let's look at a couple things before I have to close down. We're talking about the dollar. Okay, how's that dollar doing? Well, I've been telling you that it's got to do something before you can make any statement about it, because it's been in a trading range of 98 and 94 for a long, long time. And when and if it does come out of that, I think it's going to be very significant. Now it's up at 97 and a half. It looks like it wants to blow out the 98, right? But it hasn't done it yet. So if you're going to see a weaker dollar, you have to see it underneath 95. And if you do that, you could say timber, and it could have a much more big drop. So if this Fed's going to get real dovish, it could affect the value of the dollar. And if it does that, then of course other things might open up. If you see that, it could open the door for gold. Now let's take a look at GDX real quick. And on GDX, it is again had a big run. This is something I talked about when it was down in the 17 area. And I said that it looked like it might be time to take a few chips off the table here when we got up to the 23, 24 area, because again, there is some resistance there on a longer term basis, but it still looks like it's holding its uptrend. But clearly, if we take out 21 and a half, and the moving averages are in the 20 area, so pulling back towards 20 would be kind of pulling back towards the 50 and the 200-day moving average. Okay. But again, keep an eye on it, because if that dollar does drop later in the year, then you could be looking at something where the gold miners could get on there. And there's also a gold miner called Gold Juniors you can keep an eye on as well. Last thing, some of the commodity indexes have shown a bit of an uptick and a turn. And one market I would keep an eye on, because it is pretty much connected to the China deal in some respects, is obviously the soybeans. And hang on, let me get you a quote on a price on that so you can keep an eye on it, because I'm trying to keep an eye on it as well. It has been very much a lackluster market. And let me just get this up there for you, and I'll close out with it. Okay, yeah, 898 down again today. So it has been no friend to the bull. It has been no friend of the bull, right? Look at that, 950. But you can see 950 is a key. And look at the volume. So people are doing a lot of business down here for some. But I will tell you this. If we can hold this level here at around 875, and we can take out 950, this could be a very interesting market looking forward, especially if it benefits from a China deal. So you keep a little bit of an eye on this, because above 950 opens up the door for some pretty good rally. And of course, weather's always a wild card, and you never know how that's going to go in the summer. So again, keep an eye on this, because I think there's some connection to the China deal here, and it has been meandering between 950 and 875 here for a while. So that could be forming a base or a distribution. Well, only time will be able to tell. All right. Again, we went over a lot of different stuff here today, as we do each and every week. If you have any questions, shoot me an email. That's optionprofessor@gmail.com. And again, if you have any friends or associates who would like to get an update on these markets once a week and get a little bit of a slant on what I'm seeing, again, just let them go to the website, optionprofessor.com, get the link, and show up every Friday, and we'll get together next week. Okay, until then, I wish you all the best of trading and a great weekend. Lots going on here, a lot of movement. Look forward to see you next week, and we'll see how these earnings are going to start coming out by next Friday. Good day, everybody.